Hi, I'm Sarah at StockCharts, and today I'm going to be talking about investing and why it's important, and it's important to do it the right way. The car you drive, the clothes you wear, the food you eat, the personal products you use. These everyday products you use represent different companies, and many of them are publicly traded. That means you can invest in their own stocks. And once you invest in their stocks, you become more than just a consumer. Now you own a slice of some of your favorite brands. Investing is probably the best way to grow your wealth over time. Yes, it can be risky, but if you do it right, the rewards can be exponential. However, if you are going to jump in, do it the right way by maximizing your profits and minimizing your losses. Why invest in the stock market? Well, if you start investing early and never stop, your wealth can grow over time. Sure, you could save all your earned cash in a bank account. It's less risky than buying stocks or real estate, but stashing your cash can only get you so far. This is because of inflation. Inflation causes the value of your cash to steadily deplete. Why save a ton of cash when its value decreases? Plus, you miss out on the kind of growth the stock market can give you. And that's why the money you earn through investments can pay out much more than whatever you put in. Still not convinced? Here are a few more reasons why you should let your money work for you. Reason number one, you get to own a chunk of different companies. Think about all the products you use to support your lifestyle. Instead of just buying these products, what if you were able to buy shares of stock within these companies? That way, if the company does well, the values of your shares will rise. You may even get to collect dividends, which are extra cash incentives for being a shareholder. When you own one or more shares of a company's stock, you become a shareholder. In other words, you become a fractional owner of that company. Each owner then splits the benefits of the asset that they own. But be aware, as a shareholder, you also share in the company's business risks. If it doesn't do well, the value of your shares can fall. But that is part of the risk of being a fractional owner, so never risk more than you're willing to lose. However, buying shares of individual companies can get expensive. For example, let's say you want to buy Costco. One share could cost several $100s, and 10 would be in the thousands. Fortunately, there is a workaround. There are many exchange-traded funds or mutual funds that hold a basket of different companies. You can even invest in entire indexes like the S&P 500. That's 500 stocks for a fraction of the cost of buying individual companies on their own. Reason number two, you get to diversify your money. You don't necessarily want to invest all your cash in one single company. If you want your money to grow, it's probably a good idea to spread it across different types of assets. There are many different types of assets you can own. Think of your portfolio like a money basket. Stocks are probably the most common assets to hold, but there are other types, such as real estate, bonds, and cryptocurrency. When you spread your money across different types of investments, you widen your growth opportunities, but you also spread your risk. So, when you diversify your money, you're actually helping minimize your losses. Reason number three, you can make your money work for you. We all work for our money. Maybe you work full-time, or maybe you have more than one income stream, like a side gig or a small business. But if you want to build your wealth over time, you can't just have your money sitting there passively. You have to make it work for you. And this is the main reason why people invest in stocks and other assets. Investing in the stock market is the best way to build wealth over time. And if you've got years or even decades between now and retirement, think of how much wealth you can build in between that time. The stock market doesn't always go up, but historically it does have an uptrend. So by investing consistently across any market condition, including ups, downs, booms, busts, bull and bear markets, you can grow your money exponentially. This means you could end up with a lot more money than you've ever put in. And while you're building your nest egg, you can also earn extra income on the side. And that's extra cash that you can take out and use. Plus, you get to own a part of some of your favorite companies, and what's not to like about that? We know that investing can build wealth, but you may be wondering, what are your next steps? Investing is a skill, and there are many ways to go about it. But it does take patience, a willingness to learn, and just a little bit of capital to start. I'm Sarah from StockCharts.com. See you in the next video. Make sure you like and subscribe to keep up with StockCharts.com.